Hey everyone, this is Caleb Franzen with Cubic Analytics. It is Tuesday, June 21st, around 12:40 p.m. Eastern Time, and I wanted to put together this video today to kind of follow up on yesterday's video where I discussed the implications and significance of Bitcoin's price action and the WilliamsR Oscillator. In yesterday's video, and if you haven't already seen that, I definitely encourage you to do so, but we were looking at the long-term price of Bitcoin using weekly candles and the 104-week WilliamsR Oscillator. And you might be asking why I use the 104-week, considering that 1 year is the equivalent of 52 weeks. That's basically the equivalent of a 2-year relative value to find oversold and overbought indicators. And for people who aren't familiar with the WilliamsR Oscillator, it's this indicator that I have on the lower bound of my chart here, and when we cross below this lower limit, that is indicative of an oversold indication, and when we cross above the upper limit, that's indicative of an overbought signal. And just because something is either oversold or overbought doesn't necessarily mean that the trend is going to reverse anytime soon. As we know with markets, they can one of my favorite quotes about markets is that they can stay irrational longer than we can stay solvent. So just because we identify something as being oversold, that doesn't necessarily mean that the trend is about to reverse immediately, right? We may stay oversold for several months. And so in yesterday's video, we were looking at the WilliamsR, like I said, with the 104-week WilliamsR Oscillator, giving us a 2-year view. But in rewatching that video, I thought it might be interesting to perhaps look at basically the same exact data and analysis, but instead of using weekly candles, looking at monthly candles and finding the 12-month WilliamsR Oscillator. So this really gives us a full 1-year perspective rather than the 2-year that we were looking at for the weekly analysis that I had done yesterday. And so in this video, I wanted to discuss this because as of the May 2022 close, for the 4th time ever in Bitcoin's history, we've crossed below the oversold threshold on the 12-month WilliamsR Oscillator. And it's really important to say and to analyze, well, how did Bitcoin perform in these prior instances? How long did we remain oversold? What was the max drawdown when we were oversold? And so that's what I would like to kind of explore today. So very quickly here, we'll just do some quick analysis, and this is all off the cuff. I want to make these as natural as possible and try to come up with some real implications for everyone live. And so if we look here at the first occasion that we can find, happened back in September 2011, and shortly thereafter, the price of Bitcoin fell as much as 60% and actually bottomed about 2 to 3 months, or actually 1 or 2 months after that signal was first created, right? And had an investor bought right when this oversold signal had flashed, it would have taken them roughly 9 months to fully break even and never look back, right? That was back when Bitcoin was trading just above $5 per BTC, my God. Okay, so that's really interesting. We had a 60% drawdown, price bottomed 2 months later, and it essentially took us through June from September. So that gives us basically, 8-9 months until we actually got above that oversold limit. Okay, that's very good to know. So if we look back here at this next signal, this next occurrence happened back in October 2014. Price ended up falling as much as 52% through the lows, which occurred 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months later. And it took us several months, almost a full year later, to fully recoup all of those losses and never look back. And the WilliamsR, the 12-month WilliamsR Oscillator, stayed oversold through June. So that basically gives us, again, another 7 to 8 months of being oversold. If we look at the 2018 signal, it happened in September of 2018. Let's see what we got here. price ended up falling as much as 51%. So again, we've had two prior signals where the price of Bitcoin fell an additional 52%. One of them was almost 60%, if I remember correctly, and taking basically 7 to 8 months to fully reverse. But in this particular instance, the price of Bitcoin bottomed 3 months later in December of 2018. As we know, that was when the Fed had the formal shift and pivot in their monetary policy. They paused their rate hike regime. Although they were doing balance sheet runoff at the time, they formally stopped and paused doing their rate hikes. And we basically bottomed in December of 2018. Again, however, if an investor had purchased Bitcoin when this signal flashed in September 2018, it would have taken them 1, 2, 3, 4, 5, 6, 7, 8 months to recoup all of those losses. And had that investor continued to hold, they would have been underwater briefly during the COVID crash. You might say that's somewhat of an anomaly, so we don't need to consider that fully in our analysis. Last thing here I want to see is, so we became oversold in September and we crossed out of oversold in April of the following year. So again, right, that's basically 7 months down the line. So I feel pretty confident and comfortable to say that, okay, well, really quickly. So now here we are today, right? This is what we're looking at now. And we've crossed below that oversold threshold in May. And so far, I believe we've fallen about 30% from the May close. As of today, we're down 32%. We've fallen as much as 44, 45%. So based on the historical analysis that we just did, it's very plausible that we could see the price of Bitcoin fall further than the year-to-date lows we've already experienced, around 17.7 thousand. That is feasible, and we're less than 1 month in, right? We're exactly 3 weeks in to this potential 7 to 8 month consolidation phase. Now, just because we've analyzed the past performance of how Bitcoin has behaved when this signal has occurred, doesn't necessarily mean we're going to follow the same exact trends that we've seen in the past and the same exact behavior that we've seen in the past. So I just think it's important to have expectations in this market and understand how Bitcoin could perform, while understanding that it isn't necessarily how Bitcoin will perform, right? But based on this analysis, I think it's pretty interesting to see that we could still have further downside ahead and at least continue to consolidate, at the very least in a sideways manner, for the next 6 to 7 months, based on how Bitcoin has performed in the past, right? And again, past performance is not indicative of future behavior or future returns. So this is definitely going to be something to monitor. And again, continues to reaffirm this central theme that I've been trying to preach, which is, we're clearly in a defensive market right now where investors should continue to be patient and prudent in their investment allocation decisions. When I look at the market right now in these types of signals, this is basically telling me, Caleb, you now have a green light to dollar cost average. However, just because we have the green light to dollar cost average doesn't mean we need to DCA all of our dry powder over the next 4 weeks or even 2 months. We can look at dollar cost averaging now with your current capital over the next 6, 8, even 12 months. There's no need to rush this process here. Again, another thing that I've been trying to say is there's no need to try to catch a falling knife here and get a finger chopped off when we can wait and simply try to find signals and signs of a reversal to the upside, right? Back in this 2018 case, we at least started to see green candles. And if you had bought this green candle here at 3,800 instead of down here at 3,400, your risk reward wasn't that much better, but at least we started to get formal confirmation of a reversal with a monthly candle. Same with Bitcoin back here, right, in 2020. Did an investor really want to try to catch a falling knife and catch this from 10,400 to 4,000? In hindsight, we could say, yeah, absolutely, that's a smash buy. But in the moment, it was so difficult to do that. Had an investor waited for this green candle, they still would have got in at $8,700, which is an amazing entry with respect to how we know Bitcoin's price has evolved thereafter, right? So we de-risked significantly while giving us tremendous upside, right? Even though Bitcoin has fallen roughly 70% from the all-time highs, Had an investor bought in just shy of 9,000, they'd be up more than 2x their initial investment today. So again, I just want to take this opportunity to preach patience and prudence with someone's DCA schedule. And again, I can't give individuals independent and individual financial advice on what to do with their portfolios. I don't know your risk appetite. I don't know what your financial goals are. And I don't know how much dry powder you have available in order to DCA. So this is not financial advice for what you should be doing with your portfolio, but I do want to be fully transparent about how I'm looking at the market and the signals and indicators that I'm using to make investment decisions for myself. And so I'm going to end the video here. If you guys want to see more analysis like this in different forms and different platforms, be sure to follow me on Twitter at Caleb Franzen. I'm posting a lot of macroeconomic data on there. I'm posting a lot of Bitcoin analysis on there. I'm posting a lot of stock market analysis and commentary on there. So if you're really looking for a holistic perspective on the economy and financial markets, definitely follow me there on Twitter and subscribe to my free newsletter. I'll leave that down in the comment section below as well, in the description. And those free weekly newsletters, it's called Cubic Analytics. Why Cubic? I take a three-pronged, three-pillar approach to my overall investment view. Again, I look at the macroeconomic conditions, I look at the stock market, and I look at Bitcoin and crypto. And so if you're interested in any of those three things or all three of them, I'd encourage you to subscribe. And I look forward to sharing more research and analysis with you going forward. Take care, everyone.